Now, Jonathan, what are the main factors behind the World Bank lowering the Philippines' GDP forecast to 5.1% for 2025?
Okay, it's actually a combination of issues. One of them was the tariff at the start of the year. Second, we have lowering inflation, but it's still a challenge for consumers. And add to that the governance issue brought about by this floodgate scandal. So this actually created a slowdown on spending.
Now, Jonathan, during times of uncertainty, we see that bond markets often see activity. Do you expect this to happen if the World Bank's forecast holds?
Well, basically, typically investors would probably be investment shy, so they'd probably move to the safety of government security. So this is actually what is slowly happening, and we're seeing this in the auction of treasury bills, which has gained in terms of volume.
Now, how might the PSEI now perform if Philippine economic growth slows down?
Okay, let's view the current situation as, if we talk about Philippine fundamentals, they remain strong. We're a resilient economy. It's just that at this point in time, imagine yourself having a toothache and you're about to have lunch or eat in a buffet. Regardless of how good the food is, you're not really going to make any investment. So this is eventually what's happening in the country. So most likely the stock market, despite the attractive valuations, they will not invest. So most likely we'll see sideways to down action first before we get to see more substantial movements. And we're all after these governance reforms that earlier you mentioned as part of what the president mentioned earlier from the LEDA. So if that materializes, then that could actually be a catalyst for investors to start looking back at the Philippine equity market.
Now, having said that, Jonathan, for those long-term investors, is now a good time or a bad time to enter the market?
Oh, if you haven't made any investments, the current prices are actually lucrative to look at, and these are most likely consumer staples, and probably utilities are a good start for investors. But again, there's still downside risks. But again, this could be a good opportunity to start selectively investing. So I think the key word is accumulate.
And with the unemployment data coming out tomorrow, what is your forecast for the rate?
Oh, well, basically, I think we should see some improvements on the number itself, especially with inflation coming down and prospects of lower interest rates. So this should at least pave the way for a more stable inflation at around 4 to around 4.2%.
Now, before we go, Jonathan, do you expect the BSP to cut the interest rates, and what would be the reason for that?
Okay, I think with the inflation at 1.5% for November, it gives the Bangko Sentral ng Pilipinas leeway to cut rates further. And we also note that the U.S. Federal Reserve is likely going to cut. So a 25 basis point cut will most likely materialize. And probably another 50 in 2026.
Okay, on that note, Jonathan, thank you for sharing us your insights on the economy. Thank you.
My pleasure. Thank you.